This is the July 12 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Sherman Newlin. He's with Risk Management Commodities out of Hudsonville, Illinois. Greg Johnson from TGM, that's TotalGrainMarketing.com, the elevator system located right here in Champaign County for him. And then, of course, Chip Nellinger as well from Blue Reef Agri-Marketing. He is in Morton, Illinois. Commodity Week is a production of Illinois Public Media. It is public radio for the farming world, where you can find today's USDA report figures and those from CONAB, which were released earlier in the week, and the Brazilian crop numbers too, on our website. Just look for the USDA tab. That's at WILLAG.org. Just after the report Friday morning, I called to each of our panelists individually to talk about the numbers with them. We'll start with Sherman Newlin. I asked, of course, what he thought of the report.
The surprise, I think, was the old crop ending stocks were reduced to 145 million bushels. I don't know where they went either, like you were talking about. But that seemed to put a low in the market for the time being, and the market reacted, back higher shortly thereafter. I mean, we're losing some of that strength now. Part of the other numbers were, the wheat number came in rather large. Global wheat numbers came in quite a bit larger. So the wheat market, is continuing to go lower, and that seems to be dragging corn back down off its highs. One thing we got to look at, though, I mean, they raised the harvested acres from the June planted acreage number, but eventually, we got to figure out, how many acres are flooded out. How many acres do we take that back, right? The harvested acres, is it 500,000? Is it 1 million? So that's going to play some important part on where our ending stocks end up as well. And then, comes into, question now is where does our yield, where's our yield go, right? They didn't change it, obviously, on this one. It's still at 181. But with the recent rains, everywhere in Illinois, Indiana, Iowa's sitting pretty good, Nebraska. I mean, there's certain areas, sure, that are hurt. But do we hit the 181 mark, or do we even go above it? Time will tell.
Well, we'll go through some of these numbers that you already gave us. Planted acreage, of course, raised to 91.5 million acres for corn. That's up from the 90 million. Those are numbers that come from the end of the month of June acreage report. The harvested acres, which you pointed out, aren't up at 1.5 million acres. They're up 1.3, so USDA making some adjustments there. They did leave yield at 181. You mentioned the 145 million bushels that are missing from the old crop grain stocks. Now, that got rolled into the numbers. USDA has total production for this year at 240 million bushels, larger than the last time they put this set of numbers out in the month of June, and from the May numbers for that matter. What do you think the increase could be? Is 240 enough?
For now, yeah. I mean, again, I think, we're going to have to see, what kind of production we end up with. I mean, the crops out there looking really good. Since the 4th of July, we've had anywhere from 2.5 to 4.5 type of inches through here, which was desperately needed. But right now, if we can get some rains to finish, the crop does look really good in a lot of areas. So the potential is there as long as we can get the weather to cooperate, and the short-term forecast looks pretty good. You can't complain about it. I mean, we're going to be in a cooler than normal time frame after this warm up here in the next few days. But the forecast does not look bad right now.
As a producer, I'd like to talk to you a little bit about price times yield, or bushels, because that's what really makes a difference. Expectation that you'll have more bushels. When you are thinking about marketing, how do those extra bushels compute within the way you're considering what price you're willing to take?
Well, yeah, I mean, we need the extra bushels if we can get them, right? And I've been out walking fields, and it does look like potentially we have more extra bushels than what we're looking at here at the beginning of the year. So you hope you get them. I think at this point you buy some protection, you buy some put options, just in case we still follow the 2014 type chart action where we continue to go lower, and it sure feels like we could. We're getting a little bit of a bounce today, but we'll see if it can hold. But if it doesn't, we continue lower, you're looking at 375, maybe a 350 even board price at harvest. We don't want to do that, but we gotta draw a line in the sand, Todd. And I think buying some put options even now, with the market oversold as it is still you still got to do something, right? Because we still there's still quite a bit of old crop that has to come to town. That's going to cap rallies. But if we can get some bounces, we're going to have to use them to at least buy some protection for us to buy some time.
Is this the point at which you go back and start to figure your crop insurance and what the potential indemnity might be from it, and start to figure that in your total income for the year?
You don't want to, but but you can. Yeah, I mean, I've talked about it and whatnot. But if your yield is going to be, 20 bushels better than what you were kind of counting on anyway, you got to look at you're going to have quite a bit lower board price before you can collect anything. So I've thought about it. I've looked at it, but I haven't really put a pencil to it yet. But it may be something that we're going to have to do. I mean, if prices continue to go lower.
Yeah, and because that's set in October, and you're talking about board prices maybe in September as the lows, I guess. I don't know. Where did the low come in 2014? Do you have that chart in front of you, or do you recall?
I do not. But it was quite a bit lower than where we are.
Right.
Right now. Yeah. I don't have it in front of me.
Well, and it would make a difference. It would make a difference on what the indemnity would be.
Yes, it would.
Yeah. So we'll check that and see what that looks like. What else are you thinking about related to these numbers? For instance, in corn, they have exports up 25 million bushels this month from last month for the new crop. You think that's possible?
Yeah, I mean, it's possible. I mean, we've been kind of running ahead of pace. I mean, we haven't really had anything outstanding, though. I mean, exports have really been kind of disappointing here lately. So I think you're going to need something to, pop up to help prove those numbers. So it's possible. The bean numbers flat. Basically, they were mildly friendly. The bean market reacted to it, but now we're back lower again. And again, the wheat numbers were bearish, and the wheat prices are going lower as well. So overall, it wasn't super as bearish as everybody was thinking, but we're not getting a sharply higher bounce out of it either, as because funds are super short, record short actually. But that doesn't mean they can't continue to add to their short positions. Looks to me like we really need some kind of weather situation, and that doesn't seem to be in the cards right now. If anything, it looks like maybe the yield could get bigger.
USDA also, in its feed and residual number, increased usage by 75 million bushels. Do you think that there are enough animal units out there to blow through that much?
Yeah, I don't know about that. I mean, we got a cattle on feed report coming out toward next Friday. I think some are expecting the placement numbers to even be lighter. So I don't know if it's possible, but that one's hard to pin down as well. Kind of like where'd the 145 million bushel old crop corn go? Right.
Well, I guess we'll find out eventually where all of that came from. That, of course, is Sherman Newlin. He is with Risk Management Commodities. Greg Johnson from TGM TotalGrainMarketing.com actually does tell me he tracked down that set of numbers when I talked to him earlier in the day. Here's what he had to say.
We had an increase in the feed number of 75 million. We had an increase in the exports of 75 million, and then imports were raised 5 million. So the gain of 150 on feed and exports minus the 5 from imports gave us a smaller ending stocks number of 145, which gives us a smaller beginning stocks number in the 24 crop of 145 million.
Do you believe the 75 million bushel increase in the old crop exports?
I believe the exports probably more so than the feed number. quite frankly, maybe sometimes I think the USDA uses the numbers. If they overestimated the crop size or overestimated what was on farm, they kind of increase the demand side of the equation to offset the supply side. So I don't necessarily know that the feed number needed to be higher. You look at the cattle on feed number; they've been flat at very low levels. Hog numbers have been relatively flat. Chicken numbers have been higher. So chicken demand is probably a little bit higher, but I don't know if you can increase 75 million just on the chickens. So it may be just more of a way of balancing if the old crop supply wasn't quite as big as what maybe it was originally thought.
When you saw the numbers this morning, did they change anything in your mind as it's related to new crop and pricing?
Well, we dodged a bullet. I mean, the worst case scenario was that they would not have increased demand. Stocks could have been, some guesses were as much as 2.2, 2.3 billion bushel carryover in corn. We didn't get that. We kept it basically unchanged at 2.1 billion bushels. So we dodged a bullet. But the bottom line is the farmers are still sitting on a whole bunch of old crop corn, and they're very undersold on new crop corn. The market knows that. Of course, the flip side is the funds are at a record short and have been very short for several months, and almost as long as historically they have been. So, at some point in time, the funds will cover, but also at some point in time, the farmers will have to sell. And that tells me that, if corn goes down 20, 30 cents, the funds may say that's low enough and use that as a excuse to start buying back their positions. Likewise, if corn goes up 20 or 30 cents, the farmers are going to view that as an opportunity to get out from underneath some of this old crop corn, especially, and maybe even some new crop corn. The one thing I was looking at as far as new crop corn is concerned, December futures are around 410. The February crop insurance price was 466. So for producers that have an 85% policy, if they have a normal yield, they will the insurance will kick in at 396, which is about 17 cents below where we are today. So that's your risk if you don't sell new crop corn. If you just have a normal crop. Now, of course, if we have an above normal crop, then obviously that price goes a little bit lower. Your risk is a little bit more, but that's kind of the parameters I'm looking at. Is there's another 20 cents lower before the crop insurance kicks in, and so at this point, you probably don't want to sell anything, or the risk isn't to sell anything. But if corn goes up 20 cents, now all of a sudden, if you don't sell, you've got a 40-cent downside risk before the insurance kicks in. So I just encourage farmers to look at their crop insurance policy. Everybody's got a little bit different. Some are at 80, some are at 85. Some with these add-on policies, some of them can insure up to 95%. So everybody's different, but keep an eye on your crop insurance guarantee where it kicks in.
What'd you think of the soybean numbers today?
Soybean numbers were basically unchanged. Old stocks were down. Old crop stocks were down 5 million bushels, so our beginning stocks number was down 5. Acreage we knew was going to be lower, and it was, and so that resulted in a production decrease of 15 million bushels. So between that and the beginning stocks, we had ending stocks at 20 million bushels lower, but still, instead of 455 million, now we're down to 435 million. That's still a stocks to use ratio of 10%. I like to, equate everything to stocks to use, and 10% is kind of the balance. That's it's not too much, it's not too tight, it's kind of just right. The corn number is 14%, and the wheat stocks to use ratio is 44%. So the wheat market that's another thing. The wheat numbers were very negative, and that's going to probably keep a lid on any corn rally. So not to say that corn can't rally 20 or 25 cents, but anything more than that, the those wheat stocks are going to keep a lid on corn rallies. So as far as beans are concerned, it was a non-event, but again, I view it as these reports a lot of times are more negative than not. So we dodged a bullet, and 10% stocks to use ratio. We go back to trading the weather, I think, from here on out.
Can you detail some of those wheat numbers and why they're so bearish?
Production was huge. The U.S. production went up 2.4 bushels per acre. Just huge. I mean that added 133 million bushels to the production, and even though they raised exports a little bit and did some other things, the ending stocks number was still 98 million bushels higher. It went from 758 to 856. Like I say, that's a stocks to use ratio of 44%. And the government, the USDA, puts that average farm price. They lowered the average farm price by 80 cents a bushel in 1 month, from 650 to 570. Now they lowered corn 10 cents from 440 to 430. They lowered beans 10 cents from 1120 to 1110, but they lowered wheat 80 cents. So the wheat numbers are very negative, and like I say, I think that'll keep a lid on any corn rally.
Yeah, the total production there means that wheat will be used and can be used then as a feed grain, and simply will cap whatever kind of rallies might come in corn, I suppose.
Exactly. That's what I was trying to say. I don't know if I said it very well, but yeah, the extra wheat bushels can work its way into the corn ration, if the corn price, goes up enough relative to wheat prices.
Do we know, or do you think we have an idea, is this for producers mostly in the wheat numbers an issue in the western United States where there will be a lot more wheat available, or is the soft red that big in the way of production as well?
These were the soft, let's see. Oh, I guess this is all wheat. So no, I guess I don't know. I know our yields were good. We were just under 100 bushels here in our area, and last year we were just over 100. But years before that, we were in the 70s and 80s. So I think this might have been our second best crop ever of wheat, and I think I've heard the same thing in Indiana and Ohio. So I know the eastern soft red winter wheat belt had very good yields. I guess I can't speak to the west, and I don't know if Kansas, Nebraska, places Missouri, if the hard red winter wheat did as well as what the soft did, but certainly the soft did very well.
How does the grain elevator system brace itself, not for the wheat, but for such a large corn production number coming out of the Midwest, particularly this fall? And do you have to change things?
We are planning on putting more corn on the ground than we have the past couple of years. Years past, we would have as much as 3 to 4 million bushels of corn on the ground. 2 years ago, we didn't have any corn on the ground. Last year, 1 million bushels. I think this year we're planning on more of a 2 to 3 million bushel ground pile. So that's how we're planning for the bigger crop. And it's not necessarily that this new crop is so much bigger. It's just that we're going to be carrying in so much old crop corn. Now, there's always a chance that farmers throw in the towel and sell this old crop corn, and so we'll be able to load that out ahead of time. But we're running out of time. We're less than 2 months away from harvest, and I talked to several producers who, at these prices, they're just going to ride it through and hold on to 2 crops and hope the price goes up post-harvest, and then they'll sell some of the old crop as well as the new crop. But we're planning on holding a bunch of old crop corn as well as an average to above average new crop.
So your expectation this year, as opposed to several of the past years, is that we're likely to see ground piles across the whole of the Midwest.
That's what the market's telling us, yes. There's a pretty good carry in the corn market. The market is telling farmers and elevators to store corn. We'll pay you more for it in January, February, March than we will in the fall. So it's up to the grain system, elevators, and farmers to figure out a way to keep the grain off the market in the fall and bring it in Jan, Feb, and March when the market will need more of it.
Going to be hard to do if your bins are already full, I suppose.
Yes, unfortunately, yes.
Greg Johnson is with TGN. That's TotalGrainMarketing.com at the elevator here in Champaign County. Chip Nellinger is at Blue Reef Agri-Marketing. He's in Morton, Illinois. Chip, you heard Greg say there that the job is for elevators and farmers to try to keep the marketplace without grain because it's not asking for it, at least for corn. And I made a comment that suggests it's going to be pretty hard to do if they've got their bins full of old crop. Once you heard and saw the numbers this morning from USDA, I know from our conversations that you then take some time to spend with your clientele on a phone call, suggesting what has changed and what your thoughts are. What was it you told them this morning after the report?
Yeah, what we told them was it probably was a best case scenario for corn, right? Coming in under the lowest estimate on the carryout and the big demand bump. So we're likely to see some prevent plant and flooded out acres bring that or the harvested acreage at least down a little bit at some point in the future. And also, you never know where the market truly is trading from a crop size. But I've read and talked, and it seems like to me it's becoming fairly common and fairly expected that the market's maybe trading a 183 type of a yield, maybe even 184. We got a lot of weather to get through before we've got that in the bin. It's probably possible, but I don't know if we're quite there yet. I don't know if I'm in that camp yet. We got 6 more weeks at least of weather to finish these crops out and get through pollination, get through grain fill. And so likely to me that says there's the possibility for some rallies at some point. I know the old crop situation could be regional and it could really hang over us a little bit. But, that the fund's holding a near record or record short position in both corn and beans. And with a lot of weather to get through and the market expecting we've got record yields in the bin, we've got the door open for a shock to the system and a short covering rally. I don't know whether we'll get it or not, but the door's open. There's a crack in the window there, Todd.
How do you have yourself positioned or your clientele hopefully positioned to take advantage of that?
Well, there's a lot of unpriced old crop, right? We just never had the great opportunity out there to get a lot of old crop priced. And when you had that, a lot of people were struggling with wet weather. They were getting flooded out. They thought they might have some prevent plant, and they weren't willing to take their foot too far off of first base. So it's kind of a nightmare type of a scenario. And that will be something that holds us back, the sheer amount of old crop that's left and the amount of new crop that needs price. It doesn't mean we can't rally. It probably means we can't get to levels that people really want to see, which is back to $4.80 or $5 corn and $13 beans. But I do think we can see rallies that are better than they're at today post-report for some sales opportunities.
What were the numbers that surprised you most today?
Well, I think back to that corn situation, it's been pretty evident for a couple months that the USDA probably had some room to increase old crop corn demand. They were pretty conservative until today. So I would say, to answer your question, Todd, it was probably the fact that even with 1.5 million more acres, we were blessed with a couple hundred million bushel increase in overall corn demand between old crop and new crop, and it really kept us from a overly burdensome carryout today on corn.
When you think about how they made those changes, particularly in the old crop balance sheet, do they make sense to you?
They do from an old crop perspective. I can really buy that. I think maybe the new crop was a little bit of a gift, but I know that in their models too, they're looking at price, and price at contract lows, low prices in economic models is going to increase demand. So I don't have a problem with it. I think the new crop bump of 100 million on demand is maybe a little bit of a gift. I don't know that they gave us that gift on purpose, because I do think through their economic models, as they do that through their models and math, that it makes sense that lower prices are going to stimulate demand here. And if we even go lower, sub $4, that's probably only going to go and speak that maybe they even have to add on to demand a little bit more on the new crop.
Some of the soybean numbers changed as well. Ending stocks, actually, for new crop, down 20 million bushels, still a very large 435 million bushel carryout. By the time we get to the fall of 2025, they decreased the season's average price by 10 cents as well to $11.10 a bushel. And production, of course, was down 15 million bushels. I'm not sure whether that seems like a lot or a little based on the 500,000 acres that were lost in the acreage number. How did you put all those into place in your mind?
Yeah, pretty neutral. I thought that, the bulk of that probably can be explained by the 500,000 acre decrease. I think in the big picture, it wasn't as bearish as what it could have been. Probably wasn't bullish. We get down the road a month and find out a lot more about how August weather is going to transpire for beans. A lot of small beans around, a lot of yellow beans in areas that have had a little bit too much rain. So we got a long way to go before a 52 bushel bean yield is in the bin, Todd.
As you consider the marketing year for new crop, what changes, if any, have you made for producers at this point?
Yeah, again, like corn, I don't think there's a lot of changes you can make. Be ready, willing, and able to sell bounces. I think that with the fund position size you've got loaded up on the short side, It wouldn't take very much of a change to hot and dry in August to cause a 60, 80 cent bounce just from the funds getting out. But again, be ready, willing, and able to fire those bullets when we see that. I think on corn and beans, both a crop insurance discussion probably needs to happen as well, especially on corn. And it depends on where you're at, right? If you're in an area that got a lot of rain, especially around the listeners in the Champaign area and kind of that area, take a good assessment of what you think your actual yields are, and what your crop insurance coverage is, and kind of back into the calculations that way, because we may be getting fairly close to where crop insurance would kick in at average yields. Now, if you're going to far outpace your APH, that's a different situation. So crop insurance needs to be part of that discussion and thought process and what the next steps are from a marketing plan.
Are there things on the world numbers that you were watching that changed, whether those be from the United States Department of Agriculture or the CONAB numbers, which came out earlier in the week as well? Those did not change a great deal. Ending stocks for corn in Brazil were up 63 million. Total production was up 68 million bushels there for corn, which is the one I think we're really paying attention to. Production didn't change, but 1 million bushels. It was 1 million bushels lower for the soybeans. But in general, when you think about the global stocks, was there anything today or earlier in the week that caught your attention?
Well, I think there's still a discrepancy there, Todd, obviously between the USDA and CONAB on both corn and beans. It doesn't always get resolved. There sometimes, are several million ton discrepancies. So to me, it says maybe, just maybe, the USDA's got a little bit of room to continue to cut the Brazilian corn and bean crop, maybe on the August and September reports. But, the other take home to me is that big picture, as you look at where the bean ending stocks from CONAB on Thursday shook out, it was about the same as a year ago. So I know that they're going to have a monster crop at some point. Maybe that's next year. But, Mother Nature has got the upper hand. And so far, lucky for us, they haven't had that monstrously large crop that just swells their ending stocks there.
Chip Nellinger is with Blue Reef Agri-Marketing. He's in Morton, Illinois. Joined us for our Commodity Week program, the USDA special, recorded July 12, along with our other panelists, including Sherman Newlin of Risk Management Commodities. He's in Hudsonville, Illinois. And Greg Johnson from Total Grain Marketing, that's TGM, part of the Grain Elevator system, and he's located in Champaign County, Illinois. Commodity Week, of course, is a production of Illinois Public Media. It is public radio for the farming world. You may find and listen to our programming in its whole anytime you'd like there at willag.org, willag.org. Actually, just click and play right from the website, or if you prefer, you can search out Commodity Week, our closing market report, and the Illinois Nutrient Loss Reduction podcast as well in your favorite podcast applications. Just search them out by name, and once you get there, you'll be able to subscribe to those programs, or you can just go to willag.org where you can subscribe to them. On that website, you'll also find daily updated information from the agricultural economist, the crop scientist, and the animal scientist from here on the Urbana-Champaign campus of the University of Illinois. I'm Extension's Todd Gleason. You have a very, very good weekend.